Elon Musk says he's worried about the Fed crushing the value of the entire stock market. Meanwhile, JP Morgan says that investors should fade out of this year-to-date market rally, assuming there is going to be a hard landing going forward. With that being said, we have the FOMC meeting tomorrow, and we are going to see whether interest rates get risen by 0.5, 0.25, or even more than 0.5, which will essentially crash the market. What is going on, guys? Letter Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over, so stay till the end of the video so you don't have to watch another update video here on YouTube. All I ask in return is for you to hit a like button, get this to 1,000 likes, hit that subscribe button. Let's get into the video. So that is right, guys. Wednesday will decide the direction for the overall market, and it will affect our quote-unquote meme stocks going forward. Right now, the SPY from a technical perspective is looking good. It broke out of this falling resistance that we've been in since the beginning of 2022, broke out over 404, came back down based off of this resistance, and now it's fighting 404 again, sitting at 403.75 currently while making this video. Tomorrow, this will have true direction, 0.5 or less. I think the SPY continues to rally, which will be a good thing. We're going to talk about that a little later in the video, and anything over that, it is going to crash the market going forward. With that being said, short sellers have incurred 81 billion of mark-to-market losses just in January. So this little SPY rally coming up to 403 has literally lost short sellers over 81 billion, and you've seen these little small cap / short squeeze plays starting to fly out of nowhere, up hundreds of %, which we are going to touch on one at the end of this video, just from a little market rally. So imagine when the SPY goes back into a bull market, short sellers are going to be smoked. Now, the US money supply, treasury curve, and leading economic index are all signals that a hard landing will occur according to Bank of America. We've seen banks say a hard landing is coming, and then we've seen other banks say that a recession is not even the case, right? We're already entering back into a bull market. What do you guys think in the comments down below? AMC's sitting pretty. The setup is still there. I'm actually happy we saw a little bit of a hammer candle today with slightly low volume. I like this sideways trading. I really do. I'm waiting for that initial pop to get higher on AMC because the setup is still valid across the board. And GameStop has been looking phenomenal. The pattern that it's in is super bullish. Not only that, but it's tracking to exactly what happened back in January. And in my opinion, you're going to break out of this wedge for a minute before a major pop to the upside. So it's going to fake people out. And that's essentially what I'm waiting for. I expect GameStop to scale a little bit downwards, a little bit more, and slightly sideways coming out of this wedge pattern right here before getting initial break to the upside, right? Because these usually bounce back and forth before getting a move higher, and I think GameStop is going to fake people out following the cycle that happened back in January and come out of this box signaling, you know, that it's going to drop and then it's going to pop even higher. That's essentially what I'm expecting for GameStop. That's my call out right there. As for Ape is looking decent, but be very careful trading Ape because it's touching this parallel channel again, and I drew this out in the 45-minute time frame, so it's not looking that hot right now. It just got smacked at resistance right here on Ape, right around this $2.50 level, trading in this parallel channel to the upside. Usually these break lower unless they are a falling channel, which is usually bullish, but right now this is a bearish signal unless we get this cup and handle forming, which is something that looks pretty good. If we get a little bit of a handle here, Ape could break even higher going towards that conversion vote. Now, touching on some Vortex numbers real quick on AMC, 22.98% short interest, so it is rising. Utilization still maxed out at 100%, and the cost to borrow is getting even higher. Even on Webull, it's reporting 160 somewhat percent. Cost to borrow max sitting almost at 400%, which means these short sellers are borrowing over 4x their position just to hold on to these shares, and 316 is the average. So at least 3 times their shares, so they are completely trapped in the play. 6.71% short interest on Ape. This went down and then it went back up again. Utilization still sitting at 92.2%. Cost to borrow not really changing on Ape, sitting around that 7 to 8% zone. As for AMC, there's 0 shares available to borrow on Stocko Tracker, with 21,000 calls expiring in the money compared to 12,000 puts, so we are winning on the options chain. And the most recent fee of 0% because there's literally no shares on AMC. It looks like things are finally starting starting to dry up over here. The short percentage has increased, however, with short exempts still stacking up on AMC, and we saw how crazy it got with the algorithm on GameStop with the short exempts. We will talk a little bit about that later. However, Adam Aron tweeted today, he goes, "Our plan all along was to transition our now 13 Middle East theaters to local management after we trained them and opened beautiful theaters. They still will operate as AMC Cinemas. Plus, we sold our 10% stake for $30 million, continuing to build our cash reserves. Cash is king." Following the successful launch of theatrical exhibition operations in Saudi Arabia, AMC Entertainment will transition from a management and investment role to a pure licensing relationship with Saudi Cinema Company. So two great things fundamentally for the company. On the fundamental side of things, Adam Aron is doing good. Hopefully we just get our short squeeze play out of this. So out of these theaters, AMC just sold a little bit of a stake, collected more cash, and finally are transitioning from a management and investment role to a pure licensing relationship with Saudi Cinema Company. Now we saw this FUD article come out today. 3 short squeeze stocks to sell before investors cash out. Bed Bath & Beyond, GameStop, and AMC. These are like the 3 main short squeeze play stocks that we pay attention to, slash quote unquote meme stocks that we pay attention to. And usually when these articles come out, they're trying to get retail to sell off before a major rip. That's just my outlook on it. And this is opposite of what's going to happen. 3 short squeeze stocks to sell before investors cash out. More like 3 short squeeze stocks to buy before they rally. Not financial advice. I don't give financial advice. I'm not a financial advisor. Let's move on. AMC, massive downside if proposals succeed. So you have these articles saying, you know, these proposals are coming out on March 14th and it's going to crush AMC. And then you have these other articles saying AMC ape conversion, a massive opportunity to wipe out debt and drive expansion, which is good. This means that AMC can raise $22 billion if these proposals go through, which would wipe out debt, delete the short thesis, and give them cash going forward to expand on the company overall. And the only massive downside, if any, if possibility, all skepticism would be on shareholders. It wouldn't be on the company, and it would also be temporary. According to GameStop, 1 million shares available to borrow on Stonko Tracker. The most recent fee of 19.5%, 8,000 calls compared to 3,000 puts expiring in the money, so we're winning on the options chain. And right here is what we were talking about, 64.3% short percentage, 257,000 short exempts, the highest we've ever seen it on GameStop. And this was the anniversary from when it hit over 500 a share, which means that market makers have been fighting algorithms to, you know, completely cock block this squeeze from happening. Now, Dave Lauer tweeted this. Interesting. I wonder if wholesalers are providing less price improvement when filling orders from brokers who want higher amounts of payment for order flow. They wouldn't do something explicitly against FINRA rules like that, would they? Now, this is interesting because Webull, for example, if a wholesaler wants to pay Webull to route customers' orders so they get better execution, Webull's going to say, okay, we're going to get paid for this. But not only that, our customers are going to get better order execution. And then the people they're paying, the wholesalers, are saying, well, you know, we're paying for this, but we're just going to cut out that cost. Think about it as a membership fee. We're just going to cut out that membership fee by making it more expensive, right? So it's not really helping anything except letting them control the price even further, and it's not actually hurting their pockets at all. Breaking news, Lebanon to devalue currency by 90% on February 1st, and this is another example why you own gold. And finally, ticker symbol MSGM ran over 850%, at least when I looked at it today, off of literally just a debt for equity exchange agreement with Motorsport Network. Motorsport Network, the majority shareholder of Motorsport Games, has agreed to a $1 million debt repayment. This taps into Motorsport Games' $12 million line of credit with Motorsport Network. So AMC actually has done something very, very similar to this, but did not get the same exact rally. MSGM, I think if you got in and you took profits, that's great. In my opinion, I wouldn't touch this with a 10-foot pole. I think it's going to be a trap going forward. It was a very fast pump and dump. You know, the stock started making moves. It came out on good news. Short sellers probably got scared, and it caused a domino effect. Again, we reiterate that you do not want to be the last short seller getting out of a position trying to cover last, right? You're going to be the last domino to fall. That is not a good thing. You want one short to see this news, shit their pants, start covering, and then another and another, causing that domino effect going forward. And also, you notice that these stocks with no option chain get halted less, and they also rise even faster, which leads me to just show another example that market makers have way too much control in our markets in general. Overall, guys, hopefully you found value out of the video or enjoyed watching. Make sure to join the Discord down below. Don't miss that. Also, get up to 15 free stocks by hitting the link pinned at the top comments or in the description. Download Moomoo on your phone or computer, and once you sign up and deposit even a penny, you will start getting free stocks from there. You will also get free level 2 order book data, and it's just an overall good platform to trade on. That's what I got for you guys for today. Make sure to like the video, share the video, and drop a comment. I love you all. Lottery Stocks out.